So ladies and gentlemen, we now move ahead to our next session, which is scheduled at 12:30 Indian Standard Time. We're talking about learning more about how unleashing the power of next generation payment apps. We have our respected speakers for this session, and we warmly welcome you all to the day 2 of GFF, which is the largest fintech fest out here. We're glad to host all of you. Well, ladies and gentlemen, first up for our session host, the very eloquent partner, Shardul, Amarchand, Mangaldas and Co., Shilpa Mankar Ahluwalia. Let's give her a warm round of applause. Thank you, Shilpa, for joining us, and you're looking absolutely resplendent with that attire. Thank you, Shilpa. Next up, Chief General Manager, Digital Transformation and E-Commerce, State Bank of India, Rajeev Ranjan Prasad. Let's give Rajeev a warm round of applause. Business Head, Kotak 811, Kotak Mahindra Bank, Manish Agarwal. What an excellent program that was. Warmly welcome you, sir. CDO, Yes Bank, and we're going to say a big yes to him, Naveen Chaluvadi. Let's give him a big, big round of applause. What an eminent panel out here. And Shilpa, over to you.
Thank you so much. Good afternoon, everyone. A very, very warm welcome to this session on unleashing the power of next generation payment apps. It's terrific to be here. Before we kickstart the conversation, I want to share with you two very powerful, at least what I thought were powerful statistics. So in 2022, India concluded over 1.5 trillion, not billion, but 1.5 trillion USD worth of digital payment transactions. Now think about that. That's more than the combined value of digital payment transactions concluded by the US, the UK, Germany, and France all put together. The second statistic is close to 40% of all payment transactions in India are concluded digitally. Now, as you think about those two powerful facts, let me kickstart the discussion with our fabulous set of panelists. We'll broadly try and cover 4 themes over the next 40 minutes, or the 4 Ps as I like to call them. One is power. What is the kind of innovation we're going to see in the next generation of payment apps? The second is partnerships. Has the bank fintech partnership model really worked? Any changes that we'll see going ahead? Third is progress. What do we need for growth? And the fourth is privacy and protection. How do we really protect all the volumes of data that you and I generate as we transact digitally? So let me kickstart the conversation with our fantastic set of panelists. Manish, let me start with you. You know, payments has always been the first point of contact for customer acquisition, really the engine for growth in some sense. What do you see the next generation of payment apps looking like? Are we going to be able to layer on additional financial services? What are the changes that you see?
Thanks, Shilpa. So, Shilpa, I think there is a regional view to it. In India, payment has been a driving factor for acquiring customer and building business around it. But if you go to other part of the world, take an example of Brazil. There's a bank called New Bank. They started in 2013, and they took the plank of credit, enabling credit to everybody. Today, they would have 50% of the entire Brazil population as their customer, and they have an NPS of 92. If anybody can build a business like that, 50% of the population as your customer and NPS of 92, I think you have done that. In India, if you look at it, payment has been a big driving factor. We all talk about, and everybody would have seen 10 billion transaction which happened in August on UPI. Now, UPI is a railroad which has got created. What actually happened behind that was a bank account. Lot many people don't talk about it. 9 years back, PM launched Jan Dhan Yojana. And in 9 years, in August, we had 50 crore accounts which got opened. And they are the account with power UPI. These accounts has 56% penetration of women. We talk of in finance, female penetration, financial inclusion is less. But if you look at 50 crore accounts which got opened, 56% are women. Lot many people came back, Jan Dhan account, paisa nahi hoga, khokha account hai. Look at it. In 9 years, the average balance which was 1,000 rupees has moved to 4,000 rupees in this account, which means 50 crore customers 4,000 means 2 lakh crore balance which is there. Now this Jan Dhan account comes with loaded. You get RuPay debit card, you get a life insurance of 30,000, accident insurance of 1 lakh rupees. I think while lot many people talk of UPI, I think this banking account has done the magic around it, right? Once the payment has hooked onto it and people got hooked onto the digital initiatives, is where organization, whether it is fintech, bank, started figuring it out, with the payment do we really make money? And then the realization started coming in across that it might just not be enough. And that's where people started looking at it. How do we monetize the data which is getting created? Can we get into investment, insurance, deposit? And you see almost all the big fintech or the banks are after that. So I think payment in India has been a driving force of acquiring customers. And once you have acquired, you get a lot of data footprints. How do you build business is the challenge which lot many organizations are.
Manish, you did mention that ultimately what is behind UPI, it's the bank account, right? And that brings me to the next theme of bank and fintech partnerships. And Rajeev, that model has worked really well so far. Do you see that trend continuing? I mean, each one brings their strengths to the table, but do you see that partnership model moving forward as we look at the next gen of payment apps as well?
Yeah, thanks, Shilpa. I will take from what Manish just said. The kind of transformation which has been brought about in the payment space is phenomenal. It's humongous for a country like ours, where within a very short span of time, we could ramp up the numbers of the bank accounts. The percentage of unbanked population reduced drastically. But what we have also observed at the same time, that most of these solutions, they have largely been restricted to two areas, I would say. One is the payment and another is lending. Again, in these two areas also, phenomenal job has been done. A lot of fintechs have emerged, and with the IndiaStack coming in, Open framework and those things, those capabilities coming in, a lot of improvements have happened. The scaling up has also actually happened. Some banks, I would say, there have been some financial institutions who have been very agile. They have been able to move ahead with that in a very quick pace. But banks like public sector banks, because I come from a public sector bank, and I would say that there are certain challenges, but I will come to the challenges later. What we need to do as a bank and as a fintech also, that we need to examine first, because ultimately there has to be some diversification from the product that we are offering today, and we should also be mindful of the future, what the future holds for us. One area where I feel the work has started, but still to take ground, is embedded finance. With all the infra which has been created, a lot of super apps are being created where the customer can do his entire fulfillment using that super app. He did not actually move away from that app. Have we done that fully? I would say there's still a lot of work to be done. Another aspect is now we will see a proliferation of, I would say, climate finance. Because on the ESG space, yes, banks need to work, but do we have partners in the market? At least I can say that I have not come across many fintechs who are actually working in this climate finance or ESG space when it comes to creating value in terms of creating matrices for monitoring, reporting, doing analytics and those things. That is another part. Third trend which I think would pick up very shortly is the kind of longevity finance. Because by 2050, 18% of the Indian population is actually will fall into that particular category. Have we started solving, have we started looking at that aspect of this business model? That may emerge as a very model where we find investment solutions, pension scheme solutions, we find maybe some kind of robotic advisory services for that kind of a category. So we still, I think, we need to work. So these are the trends which are emerging, and we as a financial institution and as a bank, we are mindful of those things. So we need to have fintechs also who start working and start thinking on those lines. That is one part. But okay, capturing the trend is one, but then how do we face or how do we solve for the challenges that we find normally? One challenge that I would say, and which we have been facing largely, is the scaling up. Because not all fintechs are capable of scaling up and matching the scale of banks, particularly when it comes to public sector banks. Another challenge is, along with the scaling, is that leverage, that integration with the legacy system. Because most of the banks that you will come across, and particularly the public sector space, their systems are legacy. So there is always a challenge that we encounter when it comes to integration. One more challenge, I think, is the governance around the entire fintech system and the resource crunch also. I would say there is always a paucity of resource when it comes to fintech. So if the fintechs are able to solve for these few things which I just listed out, I think that will give a very solid foundation and give a fillip to this entire bank and fintech partnership. I think, I mean, that would be my take on that partnership part.
Very insightful, Rajeev. And I think, a couple of the challenges that you did highlight in terms of integration and governance are very real, and we're seeing those, play out live today. Naveen, can you share your private sector perspective on the bank fintech partnership model as we move to the next generation of payment apps? Do you see this model continuing? How do you see these challenges getting resolved?
Yeah, so thank you, Shilpa. I think we are one of the biggest beneficiaries of this bank fintech partnerships. Some of the payment systems initiatives that we have taken in the last decade, thanks to our collaboration with the fintech world. So when it comes to even Rajeev was mentioning, there are two parts to this entire fintech partnerships. One is the payments collections and second one is the core banking services. Right? In the fintech partnerships where the payments were being driven, there were actually 3 A's which came into play where fintechs were doing much better than probably what the incumbents were doing. One is awareness. They had extremely good communication budgets and communication mechanism which they have deployed to create awareness about how the transactions can be seamless, whether it was wallets, whether it was UPI apps, which actually created a lot of awareness in the people. And secondly, they have also had some budgets allocated to drive adoption. That was the second A which came into the play. And third one, they were agile. So they were agile to understand what are the changing customer needs, and they were also trying to make sure that what customer wants is given to them in the shortest possible time. What banks were doing in this, while the fintechs were focusing on these 3 A's, banks were actually focusing on one A, which was providing assurance to the customer that there is a bank behind all of this magic that's happening in your hands. And that is where we thought banks which understood the role very well in the offering payments and collections roles have been able to leverage the partnerships with fintechs and drive some good use cases. I would also tell that these fintech partnerships just did not allow banks to drive digital usage, but also like we were talking about Jandan accounts. Jandan accounts get a lot of subsidies directly from government. And when these subsidies are received in hinterlands, there is also a fintech, you may call it as a fintech or you may call it as a corporate, which are actually trying to provide assisted digital services in the market. So that is also another area where banks figured out that there is a role of third party which is capable of offering these services at an affordable cost. But when we look at moving this needle from say payments and collections to banking and assets, liabilities and assets, the fourth A, which is assurance, comes onto the top of the mind for the customer. So far when someone is using a wallet, they know that they have a limited downside if something wrong happens. And when someone is using a UPI, they know that there is a bank account at the back end where they have a lot of trust. There was a short survey that I'm reminded of. There was one survey when people were asked if you were to put your money with one largest e-commerce company in the India, second one is largest payment application in the India, third one is largest public sector bank in India, and fourth one I can't recollect, but it is one of the big techs. People unanimously answered that we want to put money with the public sector bank of India. So that was the choice. I mean, they were trying to actually get benefits out of interactions or benefits from say all the 3 other parties. But when it comes to actually putting money somewhere where they can trust, this trust or the assurance play a very large role. And this is where I believe that the fintech banking partnership that has been quite successful in driving payment collections will have to be remodeled to drive the liability and other partnerships going forward.
Thank you, Naveen. You're absolutely right.
As we talk about the power of fintech, really, I think you and I have all experienced the customer-focused convenience of fintechs. How making a payment is so easy on one of our payment apps. So, Rajeev, can I ask you to comment on, and you did mention, drawing back on what you said again, integration. Can I ask you to comment on what do we really need to power the next generation of innovation? Is it anything in terms of infrastructure? Do we need open APIs, open banking, centralized KYC? How do we get ready for really the next generation of innovation?
Shilpa, you mentioned various options, and it would not be like one this or that kind of a situation. What we are looking at, or what actually will drive this or unleash this power of the, I would not restrict myself to payment app, but this entire offering of the banking services, infra of course. But infra, I would say that in the digital infra, largely government has sought for that in terms of creation of this entire framework of India Stack and OCAN and whatnot. So, but they have solved for it. If you look at internet penetration also, with 700 million users are connected. But then, is it sufficient for a population of this size, for a country of this size? No. I would say that still we need to work on the creation of this particular infra, where it needs to be expanded further. We need to have more internet penetration, we need to have more connectivity. And then at the same time, we also need to create a kind of infra which my co-panelist also mentioned, is some kind of assisted mode, where we actually, fintechs turn into kind of digital correspondents. We have business correspondents, but fintechs, if they could also offer some value in terms of becoming some kind of a digital correspondents. So there is a lot of work has been done, but on the infra side, we still need to do a lot more. If you look at the transactions, just to add perspective, that UPI transaction itself, like 20% in terms of value is the P2N transaction, but 40% in terms of volume. And a lot of credit card transaction is actually moving from the low ticket size particular rates, from card it's moving to the UPI. So where it is all going, if you look at the transaction volumes, it is all actually coming to the hitting some core banking system. So banks also have to actually make it more robust, and we need to find some innovative solutions how to address this stress which is coming into the system in terms of infra stress. Second part which you mentioned is the CKYC part, or the centralized KYC. Central KYC, I would say that yes, again, very good infra has been created. I think it complemented with DigiLocker, it will actually revolutionize the entire thing. But I would still say that still a lot of work, a lot of ground to be covered in the CKYC space in terms of quality of data. And whatever we are doing in the CKYC matter is pure, right now it's restricted only to banks and financial institutions. It's not being extended to non-financial institutions. So I think we still a lot of work needs to be done on CKYC part. Another thing which you mentioned about the data sharing. Data sharing, yes, APIification actually has turned around the situation, and whatever you see in terms of the value being created for the lending business and all other innovative products which are being offered into the market, that has actually been made possible by this data sharing with consented data sharing. And but this DPDP Act is now a reality. So we also have to be mindful of that, how to build those guardrails along this data sharing, that the financial institutions do not land into any trouble, any kind of a regulatory or any kind of a reputation risk trouble at a later stage. And one more part I think you mentioned about the open banking, I believe. So open banking, yes, it is like outcome of all what we talked about and what has been created by the government of India or various regulators and those things, those entities. So it is very difficult to make a choice between this or that. I would say yes, a lot of work has been done, but we need to do work in all these one, 2 or 3 or 4, whatever items you just listed out, and to plug whatever gaps or the deficiencies are there in the system still.
Yes, no, absolutely. And data is an important theme you mentioned.
Rajeev, you brought out the data sharing data act. What's your view on account aggregator, which has been launched? How do you see that taking up?
Yes, account aggregator, again a perfect tool, but I would always qualify with a disclaimer. Like, see, I mean, what we are observing internally is that we are, as you know, that we are sitting on a huge amount of customer data. So we would be by far the biggest FIPs and sitting ducks, I would also say. But what we see and what internal analysis says that there is some amount of, I mean, some amount of, I would say, the purpose code and the usage mismatch, I believe, is there, which we need to solve for, because this totally goes against the very foundation of the DPDP Act. Actually, that is one. Secondly, this whole idea of interoperability is still to take shape. We don't have a kind of, I would say, SRO, presently in the ecosystem. So SRO has to be there. Some amount of transparency in the usage and the purpose code has to be brought in, so that as a FIP, I'm comfortable that, okay, whatever we have done in terms of sharing the, accepting the consent and sharing the data, actually it has been used for the same purpose. I think that kind of transparency the ecosystem still had to bring about.
So my point is, one is not many discussions which are going on. Whose data is it? Is it bank's data or is it customer's data? Right? We might feel that it is my data, I am sitting and providing. The second point which is coming in across, which you said, that the usage transparency. Rajeev, my thinking is, we have seen changes in technology first happen gradually and then suddenly. We have seen the same in UPI. While right now it does not look like the account aggregator is taking up space in people's mind, how do you see it spanning out in 18 to 24 months?
In fact, Rajeev, you mentioned a very important thing, data, and I think that's critical to fintech.
Yeah.
In fact,
Yes, Manish, yeah, sorry, Shilpa.
Yeah.
Just one, I would actually, Manish, just quote a figure. Like, we did some analysis. What we observed that 58% of the consents that we have responded to actually came on account of the from the customers who are residing in the RUSU areas. That is one. Rural and semi-urban areas. That is one. Secondly, again, almost 68 to 70% of these consents were actually meant for wealth management. And the average balance of these accounts where that happened has an average balance is just about 18,000 to 20,000. Now you tell me, a customer who is coming from a RUSU area, having an average balance of 18, what kind of wealth management is doing?
That's an important theme. In fact, I think a lot of the focus of the regulator and the RBI has also been on data protection and consumer protection. That's been a real focus area, and being a lawyer, I have to talk about regulation and data protection. We have a freshly minted regulation which you just mentioned. So I guess maybe I can ask Manish you to comment on, are we doing enough? What needs to be done to really make sure our data is protected, fraud control? Because as we transact more and more digitally, we generate much more data. The digital footprint is immense. And maybe we can do a quick survey in this room. How many of you are genuinely worried about your data as you transact digitally? Okay, I'm sure 5 years ago there wouldn't have been such a number of people raising their hands. There's a lot more awareness. So are we doing enough?
So Shilpa, I think anybody who's running a digital business, this has to be on top of his mind, and it keeps me awake as well.
Yes.
I think we look at saying that how are digital customers evolving and using digital. So are fraudsters. They are faster than us, right? The reason this fraudster gain is basic of two human emotion, fear and greed. They will make you feel that your account will get closed, your electricity will get switched, and you act on it, or the greed that you will win lottery and all that stuff, right? There's a notion that fraudster would only go in for certain age segment of customers. I think it's wrong. Fraudster decide basis your age and preference, they choose the channel to reach out, whether it is social, whether it's WhatsApp, email, phone, and all of those things. So I think it's a misnomer saying that it's only certain age bracket where fraudsters are able to, younger generation are smart and will not fall into it. So I think, how do we address that? That's one of the things which I keep looking at it, and things which come to my mind is, if you want to feed a child for a day, give him a fish. But if you want to feed him every day, teach him how to fish, right? In the similar way, while we have to address the fraud and we can use best of the technology, whether it is device fingerprinting, behavioral biometric, which can give you a complex algo about a customer, so you can figure it out, is he the real guy? But if you have to solve it for a long term, and I'm not saying that we don't use to, because we'll have to use technology, but in the long term, we'll have to get into the education mode. The more we educate people saying that what can happen and keep evolving, there's an access to the frauds which are coming in across, new frauds which are coming in across. If people are educated towards that, probably we'll be able to solve the fraud challenge which we are grappling with. So yeah, that's my view on it.
That's actually an important perspective, because consumer awareness and education is one way of dealing with it as opposed to a top-down approach. Naveen, over to you. You know, I genuinely feel we're entering a new era of innovation, whether we're looking at product innovation or tech. I mean, there are blockchain-based solutions available now, which, you know, we see payment apps layer onto. India is in the midst of launching the digital rupee or the e-rupee. The RBI 2 days ago has announced the launch of credit onto UPI. So what is your sense of this kind of innovation? How will it impact, you know, payment apps going forward?
So I will answer it in two parts. One, payment innovation is here just begun. While UPI as a rails were designed to do many things, we have only been doing savings account and prepaid for some time. Recently, the credit cards were added. Now credit lines are attached, and it's only matter of time where maybe your reward points, maybe your air miles, everything can come onto the UPI as a railroad. Absolutely, there is no doubt that this is only a beginning. Now you'll also have to understand that most of the transactions today that happens on UPI are either a QR based payments or a payments P2P transactions which happens, especially when there is a internet zone, right? So one of the area where probably there will be a lot of innovation is to facilitate payment transactions in a low internet or no internet zones. Then we'll also see a lot of frictionless payments which will be coming up in the payment space overall. It could be UPI rails, it could be a card rails, it should not really matter. The other thing that I also see is on the payment space, we will also see a lot of frictionless payments coming in toll transit area. While today there is a graduation of adoption of FASTags in certain geographies or for certain tolls, but we see with ANPR and other things which are coming, which is automated number plate reading and etc. So you will also see a lot more efficiency being driven when you are talking about toll and transit as a area. When we are talking about building so much of infrastructure, definitely this is one area that I also see there. Now coming to the blockchain. Blockchain, while all these payment systems were getting driven which were not on the blockchain channel, whether it was IMPS, UPI or AEPS, all of them are non-blockchain channels. But the first step that we have taken is to probably look at if the settlement of these transactions, interbank settlements, can happen on blockchain. So there was one initiative with NPCI in the name of Vajra blockchain, which actually helped banks to see if they can actually use or leverage blockchain technology to ensure that the settlement cycles can be near real time. Today we have 12 settlement cycles a day, but it's a matter of time where you will be having near real time. What does this mean? It will make your transactions very cheaper to the customers, and it will bring in a lot of assurance for all the settlement participants. It could also help RBI or NPCI to take a call on broad-basing the people who can participate in the settlements. The second one on blockchain, obviously the new kid on the block, which is central bank digital currency, which is CBDC. We were all talking about this 10 billion transactions which are happening on UPI, but at the same time we are also a country where there are about 700 million cash withdrawals that happens every month. When we are talking about 700 million cash withdrawals, that also should be talking about 2 to 3 billion, because any cash withdrawal, I would say, would lead to another 2-3 subsequent transactions. All these transactions which are now happening in physical cash, while it can continue to be in the currency format, could happen on the digital format, is what is the endeavor of this entire CBDC where we are talking about. Now, when we are talking about CBDC, this is completely built on the blockchain technology for two reasons. One, we will have a limited number of participants who can actually manage the currency. We call it as a currency just in the physical world, but in the digital world it could be a DTSP or token management system, which can be actually done by a limited number of participants who are equipped to do that. But we'll be able to manage the distribution through multiple banks or multiple participants who can actually build a customer facing interface. This is all built on blockchain. This will help geographically to diversify or leverage larger distribution channels when we are trying to bring in more participation in the ecosystem. Secondly, because it's on a blockchain network, it may also help us to fast track integrations or with cross-border geographies, where we are now hearing a lot of emphasis on cross-border payments using CBDC. So that is another area which can be fast-tracked. Implementation of such things can be fast-tracked if we talk about implementation and adoption of CBDC in a wider format.
No, you're absolutely right, Naveen. I think
I have a
cross-border has been a real big theme for CBDC innovation. Yes,
Yeah.
Manish.
So Naveen, cash is used because it brings anonymous. I can give it to it, nobody trusts it. Does CBDC also has that kind of a feature? Because what I believe is you probably can transact without anybody looking into you.
So yeah, two parts to this answer again. If you are talking about, because this is all technology driven, any digital transaction will leave a trail. Now what is assured in this particular framework is managed anonymity. So the transactions that a person carries out on CBDC network will be anonymous unless until there is a legal provision which actually encourages someone to look into these transactions. Obviously this is beginning of CBDC world. I mean, we are talking about UPI in 2015-16, not much discussions happening around it. Similarly at 22-23, we are only talking about CBDC, which is happening in a very, very managed, controlled fashion. But if we are talking about say 2026 CBDC, then probably this particular thing, there would be a very good clear cut legal framework which will enable this anonymity to be given as an assurance or a fundamental right to people participating in it. That is my view.
And Manish, actually, that's a critical question that came up when the whole design framework for CBDC was being talked about. Do we keep it anonymous because the idea is to keep it as close to cash as possible, but then how do you deal with the whole PMLA issues? And I think some suggestions that came out was maybe small value transactions can be anonymous, but the larger value transactions we will equate with transacting through a bank account and have a trail. But very live issues. And I'm sure we'll have answers as the CBDC framework is rolled out. But I'm conscious of time, and I want to open up the floor for the last 5 to 7 minutes. But before we wrap up, I want to ask each of you the same question: is look forward, fast forward 5 years now. So imagine this is GFF 2028, and what do you think the Indian payments landscape will look like? I mean, RBI, in the payments vision, did speak of the 4 E's, which is e-payments for everyone, everywhere, every time. So what do you think India's payments landscape will look like 5 years from now?
So, I mean, first of all, there would be a real, I would say, a very deepening of the embedded finance, which will, where the fintechs are also like integrating vertically in terms of SaaS model through healthcare, through education and things like that. So I think that will then transform that payment space. And another one key piece I think we didn't talk about is the cross-border transaction. I mean the cross-border remittances through the UPI rail and using those rails and those capabilities. I think SWIFT is presently restricted only to, just a second. SWIFT is presently restricted to only, if you say that's financial remittances. But there are, money transfer operators who are presently actually doing a lot of B2C and C2C transactions. So there I think a lot of work still needs to be done. And I think now with this UPI coming up with cross-border capabilities and remittances facilities, I think that will really pick up in the going forward next 5 years.
Cross-border, no, absolutely, I agree.
So, given that I will have to speak, I would say 3 things will be discussed when we are talking about this landscape in 2028. One, definitely we would have crossed 1 billion transactions a day by then, because we are almost 1/3 of it by now, maybe 1.2, 1.3 billion transactions. The second one is some of these apprehensions that we are talking about. I think there will be a clear-cut consent framework which will be in place, where it's not just about taking or capturing consent, but also ability to manage the concept. If you just recollect, 10 years back, we were all frustrated when the D&D was just introduced by the telcos, right? Similar things will also happen in the financial world, so that your data, if you feel that it is getting misused, you will have a power to manage the usage of that data, and that is the framework which I think will be evolved by 2028. Third one, I would say, by then, most of the payment companies will figure out a way to become profitable.
So Shilpa, I'll avoid crystal gazing. I'm struggling with catching up with the current one, so the team is pushing that.
We'll ask you in 2028 then. But lots to look forward to. I think cross-border interoperability is one big thing. Much stronger data guardrails. Hopefully we won't have so many hands going up saying we're worried about our data. With that, I close the discussion. Thank you so much, each of you, for your insights. Do we have 5 minutes, 10 minutes for questions? Okay.
Mic, thank you. Quick mic there. Just 2 questions, so keep it very concise.
Sure. I'm Vijay from DataWise. Rajeev sir mentioned about the investment required in infrastructure to manage all this digital. So who pays for all of that? Today with cash, RBI pays for printing the cash, and the risk of holding cash is distributed across billions of people, right? Who pays for the concentration of risk in a few digital wallets? And who pays for the whole infrastructure which makes this digital economy run?
Who pays?
No, see, first of all, so far as the DPI is concerned, it's a public infra which has been created. We are all aware about it. Yes, but when it comes to managing the risk, then protecting the customer, then making investment in my own infra, that we have to take care. Because a data fiduciary is our primary responsibility to take all steps, irrespective of the what you call expenditure or expenditure involved, to ensure that we are compliant and totally compliant, and we are able to take care of my customers' interest in all ways, I think.
Sure. Thank you so much. One more question. We have time. If you'd like to ask, you may want to raise your hand. Else, we're going to be giving the closing thought to our moderator. So I think, okay, one quick question. Can we get the mic passed? So your name and the question being concise.
Hey, hi. I'm Ashu G. Athole from Gestech Devrient. So this question is to Rajeev, specifically as you are from SBI. So currently, if we talk about, the current payment apps, okay, where we already, most of the people are, using these for doing this online transaction. But if I talk about the rural areas where, people are still not using all the online payments app. Okay, so if I look from next 5 years, how SBI specifically is going to foster a confidence into the rural folks to use all these payments app? The second question is.
Oh my God. Can we first get him to address one and let's see about the time? Yes.
So, I cannot speak for other payment apps. I can speak for my app only. If I just give you one figure, 60% of my YONO customers are actually from the rural and semi-urban areas. Okay. So naturally, the major share of my per day payment business or payment transaction which are happening on YONO app is primarily from this particular segment of the customer. That is one. Secondly, there are still geographies in India which are having very poor connectivity. So we have to find out some solution. We will have to maybe with the industry, we may have to sit together and find some solution. Like UPI has come with today, I think they are launching this UPI offline. So some solution we need to actually solve for as to how to cater to this segment of the population which is struggling with that. But more than the connectivity part or the infra part, actually it is the awareness part, what Naveen also mentioned and Manish also mentioned, is the awareness and the building of the customer trust. Because in these areas, the customer trust is very important. They will not use any app, they will not download any app unless they have full trust in that particular app. And by virtue of being an app coming from a financial or public sector bank, or maybe the banks who are visible there in that particular geography, that gives a lot of confidence to the people, to the public to download and start using it also.
And Rajeev, that's
Just a
an
point.
Yeah,
I
yeah,
think
sure.
3 V's will play a role: voice, video, and vernacular.
Exactly.
I think the
Interesting.
participants like bank and fintech will have to do a reasonable amount of work on all these 3 to get the confidence and comfort of these people to start using that.
And
Sure.
Actually, I was just going to say, in addition to financial literacy, digital literacy also will be critical, which is exactly
Yes.
what you're mentioning. So just any quick thoughts on financial inclusion and how to achieve that? How can the next generation of apps achieve that?
Yeah, so financial inclusion can happen when the small credits can happen. So what happens is in the RUSU areas where we are talking about, it's not just about having digital means, it also about having the money at the real time, right? So their earnings are probably seasonal. So how do banks enable with some credit instruments which are also taking care of their non-cash rich seasons? That's also a big factor which will play in. That is where UPI on credit lines will come in handy. Banks will be able to underwrite these customers and give them. The second one, in addition to what Manish said, whether it is a vernacular, it's also about also making sure that the low friction in low internet zone transactions is something which I believe will drive this entire adoption in the RUSU areas.
Sure. Thank you so much. And when you have one of the 3 most biggest banks in India, and you've got the leaders from there, and I think what a great discussion. Let's give them a big round of applause, and thank you so much.